Pablo, good to see you. How you doing? How you been? Good to see you, brother. First one in Pablo today. Autistic, good to see you. How you doing? How you been? Evening. Hello, brother. Miles and CMF Comatose, good to see you. How you doing? How you been? Joe, evening. Good to see you. How you doing? How you been, Joe? JP, good to see you, brother. How you doing? Evening all. How's everyone doing today? How's everyone's day? Good, bad, or just starting out, depending on where you are around the world? T, good to see you. How you doing, T? How you been? Okay. Let's do intro, disclaimer, and essentially what we're going to be talking about tonight's live. By that time, everyone has tuned in for the first part. A lot of data news we're going to go through on tonight's live, some perspective news we're going to go through on tonight's live, banking news we're going to go through on tonight's live, and something that everybody should be also aware of. There's a new hack going around that a lot of people should be aware of if you do use Mac devices or Apple devices in general. So here it is. Welcome to the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Miles Family. My name is Miles, and I host this live that you're watching. You can tune to this live Monday to Friday, 10 p.m. London time onwards, where I talk about the most recent news that's happening around the world in terms of cryptocurrencies, CBDCs, AI, politics, regulations, pretty much everything you need to know about regarding the world transforming into this digital future we're heading towards. And we also do Q&As on this live as well, which means if you do have any questions or any statements to make, put it down inside the comment section. More than happy to help you out. The disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. So if you're watching for the first time, that is the disclaimer of this live show. It's always been the disclaimer of this such a live show. I just want to take a second just to say thank you so much to everybody who's watching right now, who is liking the live. I can see Autistic just liked the live, Peg retweeted the live, and JP liked the live as well, retweeted as well. Thank you so much to everybody who essentially has retweeted this live. If you watch us on X, like this live, and also put a comment outside the live, hashtag XRP, hashtag Trump, hashtag Mega, hashtag whatever you want to hashtag. And thanks so much to everyone on YouTube who's watching this live also, who's also liked the live as well. Now, on tonight's live, we're going to be discussing a few things. We're going to be discussing banking news, data news, CPI news, job data news, all the things that can affect the market space moving forward. Also, some positive news to talk about on tonight's live that's happening inside the crypto space, and also some news regarding how you can safeguard yourself when it comes to cryptocurrencies, especially if you use Apple devices. There's a new hack going around that North Korea created, which, if you do tend to use essentially MacBooks or essentially anything to do with Apple devices, you could be vulnerable to this hack if you potentially click on this new virus that's going around, which I'll make everyone aware of midway into the live. Now, before we start off, let's go to the comment section first, and then we'll go straight into the first news. So where we were at, Michael, good to see you. So how you doing? How you been? Peg, happy Thursday, CMF and Miles. Good to see you as well. Peg, how you doing? How you been? What's up, Miles? What's up, CMF? Kerry, good to see you as well, brother. How you doing? How you been? Hello, Miles, and my CMF family members. Let's go, Scott. Good to see you. How you doing, brother? How you been? Perfect timing, because we're about to go through the first news of tonight's live, which is regarding the Fed. The Fed has just essentially dismissed a July rate cut aimed economic uncertainty. So Jerome Powell once again has said that he's not going to be doing rate cuts whatsoever, even in this particular month of July. So here is some data that essentially Jerome Powell is going on, and also some good data that's come out, even though Jerome Powell is saying the market is uncertain for him to do any sort of rate cuts for the market space. So here it is. The Federal Reserve's July rate cut discussions hold significance due to its potential effects on the U.S. financial markets and global economic stability. The Federal Reserve Chairman Jerome Powell emphasized the need for a cautious, essentially, sighting on ongoing economic fluctuations. The Fed maintains that July rate essentially cites economic uncertainty. In his recent testimony to Congress, was seen essentially as dovish, suggesting to Congress that essentially suggesting the rate cuts could occur if inflation remains under control. His stand essentially reflects a broader global market concerns, including those from European Commission's President Ursula, and also mentioning the US trade deals impacting the decisions. Now, regarding trade deals that's going on, as I said, essentially on yesterday's live and the night before, the EU is going to be having discussions this week in Washington with Trump's administration regarding tariffs. China is going to be having discussions at the WTO with Trump's essentially administration. The Federal Reserve signals no reduction in July's interest rate, drawing essentially attention to raising inflation concerns, addressing potential market shifts, and the dollar essentially weakens and diverted essentially investors' interest or essentially highlighted right now. The decision is essentially closely monitored for its impacts on the US economy. Jerome Powell pointed out that the current economic indicators as a key factor in maintaining some rate stability. There's concerns essentially over global inflation and geopolitically driven by economic shifts that are going on. The Federal Reserve's actions also essentially resonate across markets, affecting currencies and commodities, alike reflecting international essentially economic prudence. However, even though Jerome Powell is saying the market is unsure, the US market is unsure, we don't want to do rate cuts just in case, today we also had the unexpected job growth data come out that just came out, underscoring the resilience of the US labor markets, affecting broader financial markets and informing Federal Reserve policies centered on employment data. The employment data came out and the US is actually doing tremendously well for itself. So we don't really understand why Jerome Powell keeps on saying the US is in an uncertain stage right now and the economy is not doing too well and so on. And we don't think rate cuts is the perfect time right now. The US Bureau of Labor Statistics confirmed the addition of 147,000 jobs in June 2025, exceeding the forecast of 110,000 or 129,000, which they thought it was going to be at. This release, essentially due to its timing, directly influences the Federal Reserve's deliberations. As of now, no public statements have been issued by Fed Chairman Jerome Powell or the prominent cryptocurrency figures indicating market anticipation, or they are awaiting further signals. So since the data has come out that the US economy is actually doing pretty well for itself, Jerome Powell hasn't made a speech about it. The labor market's strength suggests that the Fed may maintain its current higher interest rate stance longer, potentially encouraging hasty rate cuts. Historically, conditions signaling stable employment often lead to high-risk assets, including cryptocurrencies like Bitcoin, Ethereum, XRP, Solana, and so on, to face market pressure. Total non-farm payroll essentially employments increased by 147,000 in June, in line with the average monthly gain of 146,000 over the period 12 months, the US Bureau of Statistics released today. As essentially the crypto community processes the data, key assets such as Bitcoin and Ethereum may encounter reduced investor appetite is what's going on. Market participation often essentially shifts towards more stable instruments during economic uncertainties, impacting large DeFi protocols and total value locked. This trend of increased non-farm essentially payrolls without additional statements from prominent essential crypto lenders and leaders implies a static position for cryptocurrency markets. When investors perceive heightened macroeconomic risk, they may gravitate essentially towards stablecoins affecting DeFi platforms. Should economic essentially indicators remain robust, the potential financial implications for the crypto sector could involve a temporary essentially holding pattern among major assets like Bitcoin. Elevated market rates essentially and decreased crypto inflows could persist if these conditions stabilize. Current infrastructure in both traditional and blockchain-based financials essentially systems remains reliant on economic indicators such as job growth, strengthening of the notion that broader macroeconomic trends govern digital asset markets also. As history demonstrates, such conditions could lead to fluctuations in cryptocurrency valuations and investor behavior on the market space. The BB bill, the big beautiful bill that was essentially passed, has advanced to Donald Trump's desk right now following a tense 24-hour standoff marked by intense negotiations and an intra-party pressure. The final vote of 218 to 214 largely followed by party lines and essentially just came one day ahead of the president's July 4th deadline. The legislation concludes a gurgling, essentially 4-month battle filled with ideologies and rifts and clashes between the House and the Senate. With a slim majorities essentially in both chambers, Republicans had little room for distance as they pushed the bill through. The package is expected to essentially increase government borrowing significantly over the coming years. Analysts suggest essentially that this could lead to a weaker US dollars and raising inflations, conditions that often essentially fuel interest in alternative assets like Bitcoin. So let's just point it out. Regarding the big, beautiful bill essentially that was going to be passed, which is now on Donald Trump's desk, which has been passed, he just needs to sign it into law. Elon Musk, we know for a fact, he's been coming out for a while now saying the big, beautiful bill is going to destroy America's economy and so on. And Jerome Powell on the one side is not doing any sort of rate cuts. Trump on the other side is still moving forward with his tariffs, and there's still geopolitical tensions happening around. There's a lot of things happening around the world. But regarding the big, beautiful bill, they're saying now that it's just been passed and Donald Trump is going to sign it into power, that big, beautiful bill is actually going to help the crypto space to be used as some sort of a hedge regarding this borrowing situation that's going to essentially go on with the US government. So conditions that often fuel interest in alternative assets like crypto. As physical policy becomes more expansionary, investors may increasingly turn to decentralized digital currencies to hedge against the dollar's depreciation and long-term debt concerns. Historically, monetary policy changes have prompted diverse market responses, particularly in cryptocurrencies and commodities. Rate stability could lead to increased speculative capital towards cryptocurrencies, depending on investor sentiments and risk appetite. Historical data supports this pattern. A lot of things are happening right now around the world. A lot of things are happening in America with the tariff situation that is apparently going to be a 10% universal tariff, which we'll talk about a little bit more in tonight's live. Also, apparently, starting July 4th, Secretary essentially Janet Yellen is going to be looking into a replacement for Jerome Powell. So the replacement search for the Fed chairman is going to start on July 4th, essentially tomorrow. So starting tomorrow, they're going to look for replacements. Is Jerome Powell getting fired, or is he leaving by himself? Or is it because of the $2.5 billion of misleading, essentially, finances is the reason why he's going to be leaving by himself? But a lot of things are happening, and all of these things are piling on top of each other. But the big, beautiful bill that's just going to be passed and signed by Donald Trump is actually going to work out in favor of cryptocurrencies, according to many analysts. Let's see how the big, beautiful, essentially, bill moving forward works out. But it should work out in favor of cryptocurrencies because the US is going to borrow a lot more money, a lot more dollars are going to be printed, which essentially will depreciate the US dollars, which will essentially, the analysts and essentially investors will look for alternatives as a hedge against that scenario, which will be cryptocurrencies. So even though nothing about cryptocurrencies was mentioned in the big, beautiful bill that's just going to be signed, it might actually work in the favor of cryptocurrencies in the long run. Now, Senator Cynthia Luminous, who was supposed to mention and put something inside a big, beautiful bill for cryptocurrencies, but she wasn't able to. Even the documentation for the big, beautiful bill was 887 pages. Nothing was mentioned about cryptocurrencies, but other than this, it maybe could affect cryptocurrencies in a positive way as a hedge against that scenario. But Senator Cynthia Luminous is now introducing a new crypto tax bill. She's mentioned a couple of times that she wants to introduce crypto tax bills, and she's talked about it. She's mentioned a few things that could be mentioned inside of the bill and so on. So now we have our newest update, which is this. US Senator Cynthia Luminous has introduced a cryptocurrency tax legislation proposal aimed at enacting essentially a comprehensive digital asset tax framework for the United States. Luminous, who leads the Senate Banking Committee Digital Assets Subcommittee, unveiled the crypto tax proposal today, a day after it essentially failed to make it into the one big, beautiful bill before it got passed. The Senate recently passed the essentially big, beautiful bill, President Donald Trump's mega tax and essentially policy bill that's now in the final stage of the House approval before it heads to his desk, which it already has. The lawmakers has now introduced the proposal as a standalone legislation, and it seeks to amend the Internal Revenue Code of 1986 to reform how the U.S. tax code treats digital assets. Key highlights include essentially a threshold or a de minimis rule of $300 on crypto transactions, elimination of double taxation for crypto miners and stakers and tax essentially parties. Now, treating of crypto like other financial assets. The bill also essentially proposes expanding securities lending rules to include digital assets, clarifying that digital assets lending is generally not a taxable event. And in order to maintain our competitive edge, we must change our tax code to embrace our digital economy. not burden digital asset users, said Luminous. She also went on to say this groundbreaking legislation is a fully paid for, cuts through the essentially bureaucratic red tape, and establishes common sense rules that reflect how digital technologies function in its time, as America does not allow its tax policies to stifle innovation. She also wanted to say, my legislation ensures Americans can participate in the digital economy without essentially tax violations, she added. In a statement, essentially, Luminous said she welcomes public comments on the bill. Luminous's crypto tax bill also joins other notable digital asset regulation bills inside the United States, including crypto market structure and stablecoin essentially regulations. Both the Clarity and the Genius Act bill are matters currently on Congress's calendar right now. Following Trump's election, Luminous introduced the essentially Bitcoin Act, a bill that seeks to establish a Bitcoin street reserve for the United States. Now, we know for a fact that Senator Cynthia Luminous is incredibly big on the idea of pushing Bitcoin as much further as she possibly could. It would be good that if she was essentially pushing the entire crypto space, but she is keep on pushing essentially Bitcoin. But with this new bill that she's just released today and essentially opened the board to public comments on the matter, it is actually going to help out the crypto space in general, not just Bitcoin regarding taxation. We should have tax laws on cryptocurrencies because it was seen that essentially they are more legitimate than just a speculative asset that's hanging around in the gray zone area. That's the last thing we want for cryptocurrencies. And I know nobody likes the idea of paying taxes, but the faster we get legislations in, the faster we get tax laws in, the faster we get cross-border payments regulations in, and so on and so on, the better it is, because more liquidity will enter the crypto market space. Now, the Bank of England is what we're going to talk about next. But before we talk about the Bank of England, let's go inside the comment section first. As I said previously, this is live, which means if you do have comments or statements to make, put it down inside the comment section. More than happy to help you out. So let's see what's happening essentially inside the comment section first, and then we go straight into the next news. Let's see where we're at. We were at here. I hope everyone had a good day. Yes, Scott, I had a busy day, but a good day. Let's go, Scott. Good evening, brother Miles. Funky brother, good to see you. So how you doing? How you been? Miles, my mentor. Let's go, Scott. Joe says, you sound tired. You okay? Yeah, I'm okay. I'm okay, Joe. Miles, my mentor. Let's go. Miles, the goat. Let's go, Scott. Thanks for just kind words, brother. Good evening, CMF. Funky brother, good to see you. So how you doing? How you been? Jerome Paul needs to be fired ASAP. I agree 100%. What a twat. I also agree. Jerome Paul has a personal vendetta against Trump. He does. Facts. CMF family, what's up? Christopher, good to see you. So how you doing? How you been, Christopher? Morning, Miles and CMF. Shelly, good to see you. One morning. How you doing? How you been? Hi, when XRP case finish and bull run start when high prices? When is the XRP case going to be finishing? Well, Q3, Q4, it should be ending. It should have ended a while ago, to be fairly honest, because the SEC and Ripple both on the same page. It's just the judge isn't letting things go. And I released essentially a thread on X why I presume the judge isn't letting it go. And it's to do with the economic essentially cover that came out at the beginning of the year. That's what I'm presuming you're on. But very soon, the case should be ending. And we should be moving forward. Miles, XLM and HBAR is going to see some real damage in this cycle. Yeah, yes. XLM and HBAR, sorry, yeah. XLM and HBAR, XDC, XRP, Solana, Cardano, a lot of crypto projects are going to do tremendously well under regulations. Happy Pisces, good to see you. How you doing? How you been? So, next news on tonight's live. Sorry about that, bro. The Bank of England's governor. The Bank of England's governor has warned stablecoin boom could undermine monetary trust. So the Bank of England's governor has come out, and even though they sent out a warning regarding cryptocurrencies and stablecoins and so on, they're also stating that cryptocurrencies are taking over at a much more rapid pace, and they're essentially, can't control it anymore. So here it is. The Bank of England's governor, Andrew Bailey, today cautioned that emerging digital forms of money, including stablecoins, could introduce a risk to financial systems if not properly regulated. What they're trying to say in that one simple paragraph is things are moving much more quicker than we thought in the digital world. And if we don't introduce regulations now, it's going to get very confusing later on in England. According to the remarks published by essentially July 3rd today from Bailey's speech at the essentially Andrew Crockett Memorial Lecture, the concept of reserve currency, he said, has essentially evolved over time and now depends less on fixed monetary anchors and more on the presence of secure liquid assets such as US Treasuries and provision of liquidity by central banks. He noted that the use of reserves has shifted from banking currencies convertibility to preserving financial stability in the face of capital inflows. Now, first, at least for the large economies, it could be asked today, what is the point of an official reserve, he said. He argued that the current conditions and reserves serve to support liquidity in moments of stress, not to manage currency essentially pegs. Bailey added that the changes in the structure of money, such as essentially the introduction of private stablecoins, should be monitored closely for potentially effects on monetary trust and for essentially singleness of money. If, for instance, stablecoins emerge as a new form of money, we have to decide how to ensure the safety of the money and therefore trust in the money in this world. And what's the role of notional reserve currency should play there, he said. He framed these developments as a challenge for the central banks, especially if stablecoins gain widespread use outside regulated frameworks. Bailey said future work should focus on defining the rule of reserve currencies in systems where new payment technologies may bypass traditional oversight. The most simplest way to put it in that one paragraph, what they're essentially talking about is that banks will have difficulty, central banks will have difficulty controlling stablecoins, and that central banks should have an alternative in a digital world. Obviously, cash can't be used in a digital world because we're going to a cashless society. And the idea of essentially the system that we're running on now, which is technically a digital system, can't also be used alongside essentially a cryptocurrency, stablecoin world, and so on. So central banks essentially are losing the plot. And if they want to have control of this digital world, stablecoins isn't really the solution for central banks. An alternative is, guess what the alternative is? CBDCs. Bailey emphasized essentially the nature of the reserve currency concept and the need for clarity in how these terms are applied in the future of monetary systems. Some regulators essentially are warning that uncoordinated adoption of stablecoins could lead to fragmented monetary systems, which means the central banks will lose control. Central banks around the world will lose control if everybody starts using stablecoins and cryptocurrencies. What's the point of a central bank? What's the point essentially of a normal bank? Because if people could transfer wallet to wallet, there's no need for banks anymore. And that governments will lose control of the printing power they once used to have. So obviously governments need an alternative to cryptocurrencies and stablecoins. It's CBDCs. This is why CBDCs aren't going away, and they're definitely here to stay. Without shared rules, private tokens might circulate outside central bank oversight, weakening the policy tools and complicating cross-border financial stability measures, which means the new central banks will technically become fintech companies, like, for example, Tether or Ripple or Circle. You get the picture. If central banks don't step in now and create some sort of essentially alternative digital currency, which is a CBDC, then stablecoins will take over the market space, is what they're trying to say, is what the Central Bank of essentially England is trying to say. This is where essentially Ripple plays that key card holder of CBDCs. And that's why Ripple created a CBDC platform a long time ago and also has multiple awards for CBDCs because they knew what central banks wanted. Otherwise, governments would just lose control and fintech companies will be the one printing money. So instead of, for example, the Fed, let's just say later on in life, instead of the Bank of England printing more essential British pounds, or essentially the Fed printing more dollars, it will just be Tether, Ripple, and Circle printing dollars and pounds and euros, which is the last thing central banks want. So this is why Ripple plays a very key part in central banks when it comes to CBDCs. Interoperability is also on the review. Authorities are essentially assessing how stablecoins can maintain consistent value while meeting legal and risk standards. This includes deciding whether such instruments should be essentially treated as a part of an official monetary system or kept in a separate framework. So, the Bank of England, Andrew Bailey's governor, the governor of Bank of England, Andrew Bailey, coming out and stating, one, cryptocurrencies and stablecoins are moving at a very rapid pace and we can't catch up. Two, we need to set regulations ASAP in the UK for essential cryptocurrencies. And he's talking to other central banks around the world that they need to move quicker on regulations because things are moving very fast in the digital world. And three, central banks can't rely on stablecoins and cryptocurrencies. They need an alternative in the digital world. Otherwise, they will fall behind, which is where CBDCs plays a role. Now, and that's essentially for all the people that a while ago assumed that, or still maybe assume inside the crypto space, that CBDCs are not here to stay and stable coins are going to take over. The reality of it is CBDCs are definitely here to stay. central banks need CBDCs to maintain control that they once had on the essentially public, and that Ripple will be playing a very, very key role in that scenario. And also Ripple applying for that banking license and getting the XRP into the Fed makes it even sweeter. Now, Chinese company is what we'll talk about next. We're going to talk about a Chinese company that's come out and decided to say that they want to own 5 to 10% of one particular cryptocurrency. What do you think that particular cryptocurrency is that this Chinese company wants to own 5 to 10% of the supply? Most people probably would think, oh, it's probably Bitcoin. You know, this Chinese company on the stock market just wants to own 5 to 10% of Bitcoin or so on. Not really. This Chinese company wants to own 5 to 10% of BNB's supply, Binance's token. The Nasdaq-listed Chinese-based, essentially Web3 infrastructure provider, Nano Labs, on the public exchange, announced that it has purchased 74,315 Binance coins, BNB coins in other words. The company made the transaction via the over-the-counter OTC market, purchasing approximately $50 million worth of BNB at an average unit price of $672.45. With this move, Nano Labs' total reserves in digital assets, such as essentially a Bitcoin and BNB, reached 160 million. In this press release, the company described this acquisition as the first step of BNB's strict plan, while essentially retreating its commitment to increasing its BNB holdings in the long term. Now, also, the Nano Labs announced that it will conduct comprehensive analysis on the security and the long-term value of BNB, and they aim to essentially purchase up to $1 billion of BNB through convertible bonds and private sales in the first phase. The company's long-term plan is to own 5 to 10% supply of BNB's total circulating supply. The BNB price has lost about 1% of its value in the past month, while the Bitcoin price has increased by about 3% at the same period of time. Interesting. I'll be very honest, because we hear companies coming out and creating a Bitcoin treasury or an XRP treasury or a Solana treasury. A BNB one is a new one, and also them aiming to own 5 to 10% of BNB supply is also an interesting one as well. But anyways, moving on from that Chinese company's footsteps to Michael Saylor. If you've been inside the crypto space for the longest time, you definitely know who Michael Saylor is. He is the man leading the charge for Bitcoin purchases. He's the man that started the idea of a public company buying Bitcoin, and then people could buy that company's shares and essentially be a part of a Bitcoin treasury. He was the man that started the whole bandwagon that a lot of companies around the world jumped on. Well, Michael Saylor is facing a lawsuit right now, and it's a class action lawsuit that's happening right now. Now, we've talked about Michael Saylor's essentially lawsuit situation about 2 weeks back when a little bit of information came out. Well, we have a little bit more information on that matter. So here it is. Michael Saylor is facing a lawsuit over $5.9 billion in Bitcoin losses. Michael Saylor's company Strategy, formerly known essentially as MicroStrategy, is facing a class action lawsuit relating to a $5.9 billion unrealized Bitcoin loss filed by Prominence LLP. Prominence LLP has filed a class action lawsuit against Michael Saylor's Strategy, focusing on essentially the reported $5.9 billion worth of Bitcoin loss. This action essentially raises questions about Bitcoin as a corporate treasury asset. The lawsuit follows Strategy's significant stake in Bitcoin, comprising 597,325 Bitcoins, and key figures involve Michael Saylor and Prominence LLP leading the legal action. The case is about accounting standards, not Bitcoin itself, instead. The company should be transparent about how they value their crypto holdings. It goes back to what Michael Saylor said on a live stage at a Bitcoin event in Las Vegas, not that far off, where Michael Saylor stated that companies like his should be hidden regarding how much Bitcoin they hold or how much crypto assets they hold, and that transparency shouldn't really apply to companies like his. Well, one particular essentially investor in Michael Saylor's company, MicroStrategy, doesn't see it that way, and they're essentially suing them for not being transparent. The lawsuit impacts corporate sentiments towards cryptocurrency holdings. It highlights potential financial losses, a risk associated with Bitcoin's volatility. Observers question corporate strategies regarding Bitcoin's investments. The case emphasizes the need for increased transparency in financial disclosures involving cryptocurrency assets. Now, they made it very clear in this lawsuit that they're not suing Michael Saylor for Bitcoin or it's got anything to do with Bitcoin, but they're suing Michael Saylor's company Strategy because he's not being transparent about the crypto holdings. He's not being transparent about their crypto losses. That's why they're being sued. So the case emphasizes the need for increased transparency in their financial disclosures involving cryptocurrency assets. Potential outcomes of the lawsuit could lead to changes in how corporations and regulators view cryptocurrency assets in financial statements. Historical trends show that caution adoption of Bitcoin for such corporate treasuries, and companies may reassess their Bitcoin strategies in response to legal proceedings. Insights into potential regulatory shifts arise essentially from this lawsuit, suggest closer scrutiny of financial disclosures connected to cryptocurrency assets. Historical trends, essentially such as similar corporate cases, indicate a possible shift in policy and investment strategies. The emphasizes the importance of adhering to transparency in corporate financial reporting. So, Michael Saylor is actually being sued right now. MicroStrategy is being sued right now. A very long lawsuit they're going for, and it's all to do with transparency. Michael Saylor is not being transparent with their investors. They're not being transparent about their holdings of cryptocurrency. They're not being transparent about their losses. And apparently there's been a $5.9 billion loss, which they're not being transparent about. Let's see how that one plays out in the long term. And is that going to be the only company that goes after Michael Saylor is also a question. Now, trade agreements is what we're going to talk about next regarding tariffs. Tariffs is playing a very, very big role right now inside of cryptocurrencies. And it's affecting the market space. Every time we hear a tariff news, good or bad, it affects the crypto market space and the stock market and so on. So here is the latest updates on tariff situations. Trade agreements, expectation. 100 nations to face tariff increases. 100 nations are about to get an increase on their tariffs. The US Treasury Secretary Janet Yellen announced plans to finalize numerous trade agreements affecting over 100 countries. By essentially July 9th, 2025, these nations may face 10% tariff hikes. Markets essentially brace for potential disruptions as the deadline approaches, with stakeholders closely monitoring the prospects for global trade policy shifts. So 100 nations are going to be tariffed at 10% extra on July 9th. Keep that in your calendars. US Treasury Secretary Janet Yellen has spearheaded the efforts to finalize trade agreements with over 100 nations by July 9th. These agreements essentially are crucial as countries face tariffs of at least 10% if negotiations fail. Yellen's leadership and proactive strategy underscores the significance of these talks in global trade dynamics. If agreements remain essentially elusive, tariffs are expected to affect the global economy. The increase could essentially increase existing trade tensions, impacting market stability and economic outlooks. As businesses and policymakers assess implementations, the US economy's response remains a focal point aimed at ongoing negotiations. President Trump essentially commented on this matter as well. He said, "We understand, we have all the numbers," emphasizing confidence yet highlighting ongoing negotiation challenges. And according to essentially a recent research study, the broader implications of raising tariffs may influence regulatory shifts and impact financial markets. Although the immediate effects on technology or blockchain remain essentially speculative, historical responses to tariffs suggest varied impacts depending on industries and reliance on global trade networks. The broader implications of rising tariffs may influence regulatory shifts and impact essentially financial markets. And although immediate effects on technology or blockchain remain speculative, historical responses are going to be essentially showing these footsteps. So 10% tariff hikes on 100 nations could possibly be on the way July 9th. That's only if those 100 nations don't come to the negotiation tables. And Trump said, in his own words, he's not going to be pausing the tariffs anymore. Whenever Trump pauses tariffs, the crypto market space does well. It's good news for the crypto space when Trump does tariff pauses. He's not going to be pausing tariffs anymore. He's going to be increasing tariffs from now on and essentially putting pressure on any nation that doesn't come to the negotiation table. I'm guessing Trump is fed up. He's fed up with everything and everyone, and he wants to get everyone to the table and sign them ASAP. The faster he does that, the faster we can move on as a market space, to be fairly honest. Now, we'll keep that in your calendars. July 9th, China is what we're going to talk about next. China's monetary policy is entering the red zone. Turns out that China has been asking for help from the European banks. China's monetary policy right now, as China's post-pandemic recovery flatters and deflationary signals deepen, the People's Bank of China, their central bank, essentially has begun quietly seeking advice from European financial institutions on how to navigate a prolonged period of low interest rates. So apparently, in China's words, since COVID until now, China hasn't adjusted. Their economy is still in shambles. And very silently, they're asking the Europeans for help regarding their market space. Even though China puts on a very big show for the news regarding going up essentially a head-to-head against Trump, that China is strong, China is resilient, and we will stand strong. Apparently, the Chinese essentially centralized banks are asking for help from the European banks. According to reports, China's central bank made an ad hoc a request to at least 2 major European banks earlier this year, asking how their economies manage the impact of their near-zero rates on financial systems during the previous decade. It said, essentially, this is what was said. We saw it as essentially a precautionary move. One European banker familiar with the request said, you don't wait until the engine stalls before asking how to restart it. So one bank, instead of helping the Chinese central bank, decided to mock the Chinese bank by saying, you don't wait for the engine essentially to stall before you restart it. For the past year, Beijing has steadily trimmed interest rates in hopes of bringing the domestic economy back to life. The benchmark policy rate was a cut to 1.4% from its 1.8%, and the one-year loan prime rate essentially now sits at 3%, down by half a point. Despite Beijing's essentially efforts, the economy remains unresponsive. Low household spendings and businesses not borrowing as much as they should, and despite the incentives and prices have fallen for 4 straight months, with no relief on sight. The slowdown is not only a cause of headaches for Chinese policymakers, as the threat of deflation lurks. In its latest monetary policy statement, the People's Bank of China acknowledged the uncomfortable truth. The economy faces insufficient domestic demand and persistence of low prices and various hidden risks. Do you know what this indicates? That if any country goes into war, China's not helping them. So for everybody out there that assumed, even for a second, that regarding the situation that's happening in the Middle East, essentially with Israel and Iran situation, and a lot of people assume China will step in and help the Iranian government. The idea of that happening was just ludicrous, because I said this a long time ago and I'll say it again. China is not going to risk their own country by getting sanctioned. China's biggest thing is being able to do exports. China's biggest market space, their biggest money maker, is being able to produce and sell worldwide. If China gets sanctioned, they can't sell worldwide, because if America sanctions China, Europe will sanction China, and it will just follow like a domino effect, which means then essentially China will collapse on top of itself, because they'll produce so much and nobody to sell to. And that's what China is fearing right now. I said this 2 years ago. The reasons why essentially China's economy is not doing too well, the real estate market is collapsing, and so on and so on. Well, they're asking for help from the European banks because they're afraid of collapsing from within. And that Trump's tariffs are actually putting pressure on the Chinese economy, as much as, again, the Chinese economy has done interviews, even with the BBC, stating, we don't care, we are strong, we will go head-to-head against Trump, and so on and so on. Doesn't seem like that way if they're asking for help from the European banks. Perhaps even more telling is what the central bank didn't say. Gone was the usual talk of bold interventions and aggressive easing. Instead, officials pledged to implement policy with more flexibility and insanity and peace. What China fears is Europe knows well. After the 2008 financial crisis, the European Central Bank came up with the monetary policy tactic, such as zero and sometimes negative interest rates to cushion the impact of global crisis on its economy. During that period, growth remained slow and banks essentially struggled to stay profitable. It was a delicate balancing act where the goal was to create inflation without essentially suffocating financial institutions. According to one source, even European asset managers were drawn into the conversation. State-owned Chinese banks and issuers reportedly asked for suggestions on how to invest in low-rate environments. And then there's the shadow of Japan. After its real estate bubble burst in 1990s, Japan entered essentially what the economist now calls the lost decade, a period of economic stagnation and deflation that lasted more than 20 years. The signal alluded to the fact that deflation is hard to shake. It shows that they are learning and getting ready, as essentially an economist at the European Bank said towards the People's Bank of China. Meanwhile, China's financial markets are starting to react. Long-term bond yields have dropped sharply over the past year. The 30-year-old essentially now sits at just 1.86%, down from 2.42%, and the 10-year essentially yield has dipped to 1.65%. Investors are spooked by weak growth and prospects, are piling into safer assets and essentially pulling yields down with them. 3 weeks ago, I shared news from BitMEX exchange, where essentially BitGet exchange, where essentially the founders and essentially the co-founders and the CEO of that one exchange came forward and said that China's economy is not doing too well. 3 weeks ago, one of the biggest crypto exchanges out there came forward and said China's economy is not doing too well. And when the time comes, Chinese investors are going to hedge against their own country, essentially their own government, of what this shambolic movements they've created in their own domestic markets. And that they're actually going to be going towards cryptocurrencies because the data showed since 3 weeks ago that Chinese investors are actually pouring into the crypto markets slowly. And that the more this carries on, the higher the chance that we're going to get a tremendous amount of liquidity coming in from China's market space. And by the way, with the economy that China has, how was it planning on creating BRICS? Honestly, with the economy that China has created for itself, in its domestic economy, how was it planning on creating BRICS? China's central bank and essentially non-central banks have been asking the European banks for help since the beginning of the year. So I'm sorry, how was China planning on creating BRICS again when they're asking the European banks for help? That trend has regulators on edge. Some officials have drawn comparisons to the US banking crisis of 2023, when Silicon Valley Bank collapsed under the weight of mismatched essentially interest rates and exposures. China's smaller regional banks already under pressure and could be vulnerable if the bond market continues to slide. So far, the People's Bank of China still has some breathing room, and rates aren't at zero yet, but the central bank knows time will be running out soon or very short. So, China needs help badly. Now, moving on from that to Ripple. Sorry, not to Ripple, to North Korea. There is a new hack going around that people should be aware of. And this hack is essentially, it makes anybody that uses Apple devices vulnerable right now. So if you are somebody that uses a Mac OS in general to, log on to a crypto website, if you are somebody that uses, essentially your Mac devices to trade on, for Binance, for MEX exchange, or any other crypto exchange out there, well, North Korea has created a new virus that only compromises Mac devices, so Apple devices in general. So here it is. If you are somebody that uses Apple devices, you should be aware of this new virus that's going around. Security researchers at essentially Sentinel Labs have revealed in a recent report that hackers now use a new and dangerous computer virus which is targeting crypto companies and essentially users through Apple devices. They're only aiming for people that use Apple devices. This particular virus is only for Apple devices. Experts have discovered a backdoor tool called Nimdo, is what essentially the North Koreans have called their virus, Nimdo. A North Korean hacking group utilizes this malicious tool to steal sensitive data, including passwords and cryptocurrency wallet files. The attack is smartly essentially disguised and manages to bypass many built-in Mac OS security checks. The attack essentially begins with a message sent through Telegram, which a lot of people inside of crypto space use. If you are inside of crypto space, of course you use Telegram. So how they're approaching people is through Telegram. They'll send you a Telegram message pretending to be some sort of company, or essentially pretending to be somebody inside the crypto space. And then they'll essentially take you to a meeting, and essentially a Zoom call meeting, and they'll book you in. It will all look legit. It'll look very legit to a lot of people. It'll be a website. They'll book you in a calendar. They'll do a Zoom call with you. And somewhere down the line, they will send you a link to update your Zoom. They'll say, for example, your Zoom camera is not working properly. Can you update your Zoom so we can continue this meeting and so on? And they'll send you a link to update your Zoom. That update link for that Zoom call, or essentially that Google call, is the virus. And you won't know, because you will essentially update your Zoom. It will actually update it, but in the background is installing that virus into your Mac devices. And it only works on Apple devices. So the attack begins with a message sent through Telegram known to be vulnerable to crypto malware. On the messaging app, the hackers pretend to be a legitimate contact, then invite the target to a fake meeting scheduled via Calendly, a widely used calendar tool. As a part of the setup, the target is asked to download what appears to be a Zoom update. However, instead of updating the video app, the file installs malware that runs quietly in the background, and you will have no idea about it. It sidesteps the Mac OS safety checks by disguising itself as a trusted update. Even Apple devices won't be able, Apple's security won't even be able to tell. Apple's own antivirus won't be able to tell that this is a virus. It will just pass right through. The virus is called Nimdo because it was created using a NIM programming language, which is not commonly used in cyber attacks. This makes it harder for Apple's security system to recognize it and block it. Once Nimdo is installed, it starts to steal sensitive data. It collects safe passwords from browsers, files from Telegram conversations, and crypto wallet credentials. It also sets up a backdoor, allowing hackers to return later and steal more from your devices. And you have zero idea about it, because the door will be open and hackers will just enter in the back end of your essentially Mac devices and the back end of your Apple devices and steal more information whenever they want, because there'll be just an open door for them. Sentinel Labs experts also recommended checking Telegram contact lists for suspicious profiles, particularly those that send unknown files. It was emphasized that these simple checks can prevent attackers from getting in. This new malware essentially attack adds to a long list of recent cybercrimes linked to North Korea's notorious hacking group. Just last week, Interchain Labs reported that North Korean developers had essentially hired unknowingly to work on major blockchain projects. This one was very stupid. Blockchain developers unknowingly essentially hired North Korean hackers thinking they were developers, and instead their blockchain essentially project was compromised. Recently, the U.S. Department of Justice essentially filed a civil essentially forfeit to seize $7.74 million worth of crypto linked to North Korean IT workers. It was revealed that these workers pretended to be remote employees in a different country, but instead they were just North Korean hackers. These criminals usually essentially send the money back to North Korea to help the government avoid sanctions and fund its military. And according to TRM Labs, North Korean linked essentially groups stole around $1.6 billion from Web3 companies in just the first half of 2025. The biggest hit came in February when Bybit lost $1.5 billion by a single breach. This hack essentially event accounted for over 70% of all the crypto losses in that period. So if you are somebody that uses Apple devices, like essentially a MacBook or MacBook Pro, MacBook Air, or even an iPhone, There is a new virus going around only designed for Apple devices. If somebody messages you on Telegram, WhatsApp, direct messages, Facebook, Instagram, TikTok, don't click on random links. Don't ever click on random links. If somebody messages you saying they can help you make a lot of money, they can help you trade, or they have a new trading bot idea, or essentially it's a crypto company that's trying to give you discounts or offers, don't believe a single word. Don't even open the message. Just swipe and delete. Don't even read the message. Don't open it. Don't look at it. Just swipe, delete, report to junk. That's all you have to do. Especially if you have an Apple device, because this will easily pass through any Apple devices. So remember that. Just in case, if you do get a random message on Telegram, Instagram, TikTok, X, whatever it may be, any social media platform, or even if it's a direct message, don't even bother reading it. If you don't know the person, don't open the message. Simple as. If you don't know who it is, don't open the message. Now, what we're going to be talking about next is another company that's came forward to add Bitcoin to its treasury reserves. So, before we go through that news, let's go inside the comment section first. As I said previously, this is live, which means if you do have any questions or comments to make, put it down in the comment section. More than happy to help you out. So let's see where we're at. We were at here. Joe says, so it sounds like they are definitely not going to allow you to buy stable coins with CBDCs. Regarding the Bank of England news, yes, 100%. The idea of essentially CBDCs being used to buy cryptocurrencies or stable coins is never going to be possible. I said this a while ago, and I stand by it 100%. And Joe, yes, you are correct. They're not going to be letting you buy with CBDCs because they'll just free you from the digital prison they're going to be creating for everyone. Hi, Miles and family. Golden Dragon, good to see you. Well, how you doing? How you been? Ray, greetings, Miles and CMF. Good to see you. Well, Ray, how you doing? How you been? Lena, good evening, Miles and CMF. Good to see you. Well, Lena, how you doing? How you been? Now, a new company has joined the bandwagon of buying Bitcoin and adding it to essentially their treasury reserves. This company is called Hammock Limited. In a bold move that bridges traditional finance and the crypto world, Hammock Limited, a public gold mining essentially company, has announced the addition of Bitcoin to its corporate treasury. This decision signals a significant shift in how established companies are beginning to view digital assets not just as a speculative tools, but as long-term stores of value. By investing in Bitcoin, Hammock Limited is placing trust in digital assets' future and potentially alongside its existing investments in physical gold. The decision reinforces Bitcoin's narrative as essentially digital gold as a hedge against inflation and economic instability, which continues to attract institutional interest. Hammock Limited's move reflects a broader trend among corporations seeking diversification and security in essentially uncertain economic conditions. As inflation essentially concerns persist and fiat currencies face volatility, Bitcoin is increasingly seen as a reliable alternative for preserving capital. This announcement aligns with Hammock Limited with their other forward-thinking companies like MicroStrategy and Tesla that have already integrated Bitcoin into their treasury strategies. For Hammock, this diversification could offer resilience in financial planning while also aligning with the growing adoption of digital currencies. The integration of Bitcoin into Hammock's reserves may set a precedent for other essentially resource-based companies as a line-up between traditional essentially assets and digital currencies continuing to blur, where more firms could follow in suit and rethinking treasury managements in the digital age. With this move, Hammock Limited is not only investing in the asset itself, but also sending a message worldwide that essentially adding a crypto treasury to your company could be the way of the future. Now, on the topic of adding Bitcoin to your treasury, or essentially any crypto to your treasury, Franklin Templeton has came out with an interesting perspective. You see, yesterday we were talking about how certain companies are just creating Bitcoin treasuries because they're public companies and that they want to get their share prices up. So let's just say if there's a company on the stock exchange, there's a public company on a stock exchange, and their share prices are down, and the company's not doing too well. That company will decide to buy, for example, Bitcoin. They'll decide to create a Bitcoin treasury and then buy Bitcoin and then announce it to the whole world that they've created a Bitcoin treasury. And they're only doing that to boost their share price on the stock market. That's what's happening right now, where companies that are doing very bad on the stock exchange are creating some sort of a Bitcoin reserve to boost their share prices. Could that be counted as manipulation in a way? Because this is what Franklin Templeton is coming out with now. So this is what we discussed yesterday. And today, Franklin Templeton has came out with this. This is their analyst. So Franklin Templeton's essentially analyst warn of dangers of corporate crypto surge. Analysts at Franklin Templeton's digital assets have expressed concerns about public companies using bold strategies to hold cryptocurrencies on their balance sheets. While the rewards may seem high, analysts warned that this could backfire in dangerous ways. A new report outlines how fast-growing strategies may create a cycle of profits or losses that could spiral out of control. What they're essentially trying to say is that a lot of companies are coming forward and creating that, Bitcoin treasury on purpose just to boost their share prices. But what those companies don't understand is what is Bitcoin or what is cryptocurrencies and how volatile they could become sometimes. And now let's just say a wave of companies just jump on the bandwagon, create a Bitcoin treasury, buy Bitcoin, so it boosts their share prices by announcing it to the whole world. And let's just say a company like MicroStrategy, who's now being sued for $5.9 billion in a class action lawsuit, decides to sell a tremendous amount of their Bitcoin due to their lawsuit. Well, the companies that jumped on the bandwagon, all these public companies that jumped on the bandwagon, will take humongous losses depending on how much Bitcoin they brought, because all they cared about was boosting their share price, and now they're taking a massive loss. So that's what essentially Franklin Templeton is talking about. So a growing number of public companies are now adopting a crypto treasury strategy, and these firms raise money through equity convertible notes, preferred shares, and other financial tools, and use the funds to buy and hold crypto assets. And according to the data from Bitcoin's treasury, at least 135 public companies now hold Bitcoin as a part of their treasury. 135 public companies now hold Bitcoin as their treasury. I'll bet you any money that most of these companies don't even know what Bitcoin is. They only did it to boost their share prices, just so they can go around to the whole world and announce, we have a Bitcoin treasury, go for our stock. But when it backfires, these 135 public, 100 of them, or let's say 50 of those 135 companies could go bust, depending on how much money they put in. Following essentially this trend, companies such as Mora, Metaplanet, 21, and Soul Strategies have also adopted this essentially approach as well. Other firms are also essentially focusing on other crypto assets such as Solana, Ethereum, and XRP for long-term growth as well. Analysts say this model can be very profitable, especially during the crypto bull markets. Companies can raise capital at prices above the actual value of the crypto holdings, and this gives them an edge. Every essentially new share they sell and generate more money than their assets are worth, allowing them to grow faster without essentially relinquishing too much ownership. Surprisingly, crypto volatility through risky can help boost companies' values. It definitely can, because every time a company announces they're into cryptocurrencies, they're creating crypto treasury, people start buying their stocks. Metaplanet was a failing Japanese company pretty much. And one day, Metaplanet decided to essentially create a Bitcoin treasury and follow MicroStrategy's footsteps. Metaplanet's shares went through the roof. They were pretty much on the verge of collapse. But just because they essentially created a Bitcoin treasury, their share prices went through the roof. And everybody's jumping on that bandwagon now. It could end very bad for a lot of public companies if one big player decides to sell. And that big player, we know who that is. That's definitely Michael Saylor. This comes as big crypto swings do make tools like convertible notes more valuable due to the embedded options they carry. Additionally, rising crypto prices also boost stock prices, attracting more investors. However, there is a catch. If the stock price of these companies falls below the value of their crypto holdings, known as the net asset value, in other words, the NAV, trouble starts. At that point, issuing new shares becomes harmful to current investors because it reduces the value of their shares. Analysts say that this is called dilution, essentially. Even worse, falling crypto prices can trigger a negative feedback loop. If companies attempt to sell crypto to prevent their stock from falling, they may push prices even lower. So in other words, once you enter the Bitcoin treasury race for your company, you're stuck. If you have a company, a public company, and you create a Bitcoin treasury to boost your company's stock, and you buy a little bit of Bitcoin, and you buy a little bit more, a little bit more, a little bit more, a little bit more, and now you're in the race of, owning Bitcoin for your public company. If Bitcoin's price goes down, your stock goes down, and the value essentially of your Bitcoin holdings go down, which puts pressure on your current investors. And you can't essentially create more convertible notes because it's going to harm your current investors. And if you try to sell your Bitcoin at that moment in time to save your company, you're going to hurt your investors even more, which will then essentially hurt your stock prices more, which will then could lead to lawsuits. So the easiest way to put it is, MicroStrategy, Michael Saylor, is stuck. And is that why there's a $5.9 billion lawsuit going on right now against this company of losses? $5.9 billion of losses is what the lawsuit is about. Michael Saylor is stuck. If Bitcoin's price goes down, Michael Saylor's holdings in value go down, which means his stock price will go down. And at that moment in time, he can't create more convertible notes because it will put pressure on his current investors in MicroStrategy. He can't sell his Bitcoins in that moment in time because that'll put pressure on his stock price even more, which will put more pressure on his current investors. So the only thing that Michael Saylor could do is continue buying because he's stuck in just a looped cycle. This is why this man keeps on buying non-stop, because he can't get out. He can't get out unless he does an instant sell, which will have major implications because it will send alarm bells all over the market space on the stock market, which will make other companies sell. Michael Saylor is stuck. He can't get out of the Bitcoin race. Bitcoin goes down, his stock price goes down, his investors feel the pressure. Bitcoin goes down, he tries to create more convertible notes to save it. It's going to put pressure on his current investors. Bitcoin goes down, his stock goes down, he can't sell his Bitcoin because it will put more pressure on his stock, which will put more pressure on his investors. He's stuck. Michael Saylor is stuck. And that's probably why Michael Saylor was trying to pressure Microsoft to buy Bitcoin. Remember when Michael Saylor said he wants to join, remember when Michael Saylor said he wants to join Microsoft? Michael Saylor said he wants to join Microsoft's board meeting to persuade them to buy Bitcoin. Which company CEO do you know willingly goes to different companies' board meetings and says, let me tell you why you should invest? Michael Saylor has tried to pressure Facebook to create a Bitcoin treasury. Facebook rejected it. Amazon rejected his idea. Microsoft rejected his idea. And then he went to India and tried to get Indian businesses to invest and create a Bitcoin treasury. That didn't work out either. And then he went to Pakistan, tried to get the Pakistani government to create a Bitcoin treasury. He's stuck. And all this is pretty much revealed from Franklin Templeton's warning. Analysts essentially consider this scenario particularly dangerous as it could deteriorate investors, leading to further selling and downward spiral of losses. Franklin Templeton is not alone in raising red flags right now. Last month, analysts at essentially Presto Research stated that these companies face a real risk of collapse if things go south. MicroStrategy could be on the verge of collapse because the man's lost the plot. And he's stuck in a loop cycle. However, they also believe that the risks are more complex than those of past crises, such as Terra and the 3AC situation. Meanwhile, David Dong from Coinbase Institutional warned that highly leveraged crypto buying by companies might create a broader risk of financial systems over time. Even Coinbase is coming out and going, okay, maybe this is a bad idea. Coinbase, a company that sells crypto, promotes crypto, is coming out and saying, okay, maybe, public companies creating convertible notes to buy Bitcoin might be a bad idea because it could go very south. Coinbase, all they do is promote crypto. Why are they negative now on this particular idea? Because if it backfires, it's really going to backfire. Still, Doug believes for the time being that the threats might be low, but keep your eye on these public companies. So if anybody was out there and they were thinking to themselves, why is Michael Saylor keep on buying Bitcoin? Where does he get the money from? How does he keep on doing this? Well, Michael Saylor is stuck in a cycle loop that he can't get out of by the looks of it. Now, before we go to the next news, let's go inside the comment section first, and then we go straight into the next news. By the way, if you watch this for the first time ever, as I said before, this is live, which means if you have any questions or comments, put it down to the comment section. More than happy to read them out for you. So let's go inside the comment section first before we go straight to the next news. Shelly says, someone tweeted, why didn't Bitcoin apply for a bank license asking for a friend? I thought that was hilarious. That is hilarious, I'll be honest. Obviously, we all know why Bitcoin can't apply for a bank license. I mean, it's not really a company in any sort of a way. There's no company behind it. See, this is when, people say, oh, Ripple is behind XRP Ledger. That's a bad thing. Is it really, though? Is Ripple being behind the XRP Ledger a bad thing? Because Ripple is applying for a banking license, which is also going to get XRP into the Fed. Is that really bad? Or is that really, really good? But yeah, Shelly, facts. I mean, absolute facts. How long will it take for Ripple to know if they were successful with their application for a national bank charter from the OCC? I don't know the exact timeline, to be fairly honest, but I could find out for you, no problem. Jonas, hello, Miles, the CMF family. Good to see you, Jonah. How you doing? How you been? Shelly also says that's why the board members are selling their shares and strategy. They see the writing on the wall. Exactly. Good pick up on that, Shelly. Facts. Evening, Miles. I'm just confused with the new start time of the CMF live show. I'm just late. Cali, no problem. The CMF live show that you're watching right now starts at 10 p.m. London time. Always from now on. And Monday to Friday is 10 p.m. 10 p.m. It used to be 11:30 p.m., but now it's 10 p.m. So we start an hour and 30 minutes earlier. If BTC goes down, then the whole market goes down. Right now, all cryptos are linked with Bitcoin. True. But if we get, that's a very, very, very valid point that Funky Brother has made. If Bitcoin goes down, then the whole market goes down. Right now, all the cryptos are linked to Bitcoin. Facts. But right now, they're linked. The moment we get regulations, which we're not that far off. If we get regulations, we're not that far off. Which means then certain crypto projects won't be linked to Bitcoin. And the imminent threat right now is low of that collapse happening. So the collapse that's MicroStrategy is stuck in a cycle loop is low for it to be happening now. But it can happen, and it will happen, just not now. So we're going to get our regulations before that ever happens. Before that collapse ever happens, we're going to get our regulations, because regulations are happening this year. By the end of the year, we're going to have some regulations on paper. So regulations equals detachment from Bitcoin, and it also equals utility. Robinhood's founder was on live news. He went on live news and he was talking about cryptocurrencies, and his exact words were, this was like a day ago or 2 days ago. His exact words on the news was, it's time to move away from Bitcoin and to focus on utility. Is his exact words. It's time to move away from Bitcoin and focus on utility. That's the stage we're coming to now. Regulations, essentially. We're coming to a stage of regulations. Regulations happen, detachment happens. Where XRP, XLM, XDC, and all that, they'll start detaching themselves because they have their own contracts, their own essential licenses in place, and what their utility is going to be in whatever aspect they're going to be in. Well, XRP is going to be finance, XLM finance, XDC finance, and then you have Solana and different multiple sectors, and you have essentially tons, different sectors, Cardano, different sectors, and so on and so on. And they're all detached from Bitcoin. And then after that, whatever happens to Bitcoin, who cares? I'll be very honest. Because if you're positioned well on utility, then you're good to go, which is XRP. Now, but yeah, good question, Funky Brother. But we're on the stage of regulations, and even Robinhood's founder stating on the news, live on the news, stating it's time to essentially forget about essentially Bitcoin and focus on utility. What does that tell you? Technically, Bitcoin has the utility. And it's essentially the altcoins that have the utility. Not all altcoins, but some do. Just hope Michael didn't think of selling right now. I don't think he'll sell right now. No chance he'll sell right now. Now, Ripple. Ripple's CEO has come out and broken his silence about XRP and Ripple shares. So everybody should be aware, if you've been inside the crypto space for the longest time, about a company called Linkto or linked to or something like that. But everybody should be aware of a company called Linkto, which at one period of time inside the crypto space decided to sell essentially Ripple shares, pre-IPO essentially Ripple shares, to a lot of people inside the crypto space. And Ripple's CEO decided to today come out and address everyone and just put it to bed. So he said, this is what essentially happened. Ripple's CEO Brad has addressed the growing confusion among investors over the differences between XRP and the Ripple shares. In a statement essentially on X, he made it clear that XRP is a digital asset, while Ripple shares represent company ownership and are not connected in XRP in any way. Investors' misunderstanding reportedly increased following Linkto's sale of Ripple shares on their platform. Most buyers had a false opinion that they were buying stocks directly from Ripple. Brad clarified that Ripple was not involved in this kind of transaction and has nothing essentially official or on paper related to Linkto. He verified that Linkto brought an approximate of 4.7 million Ripple shares using second market transactions with initial investors. Ripple did not make or even authorize these essentially transactions. The company only did this to ensure that Linkto indeed had the shares that it essentially said it would had. But Brad made it clear that this was not an endorsement. Due to the rising concerns and essentially their brand risk, Ripple halted all secondary shares transactions involving Linkto in late 2024. This decision was made to prevent further confusion among retail investors and to protect Ripple's public image. Brad also induced the way Linkto had dealt with the sale process, arguing that Ripple was not aware of how the platform defined the shares or handled customer money. He made it clear that Ripple has never entered into any dealings with Linkto and did not participate in any funding rounds of which the company was a part of. He also added that Ripple does not know how Linkto intends to address any issues to its customers that it's now facing. And although Ripple's stock has grown in value over time, Brad essentially has grown in although Ripple's essentially stocks has grown in value over time, Brad cautioned that those interested in investing in it that essentially made any profit using Linkto lies beyond Ripple's control. Brad's statements highlights Ripple's firm stance on separating itself from Linkto's operations. The company remains committed to clarifying the distinction between its digital asset XRP and its privately held shares to eliminate further confusion. I'll just, Linkto is in a whole world of essentially damage right now. I mean, they're going to be sued to the ground by all their investors, to be fairly honest. There's no way that that company is surviving any sort of way after all the lawsuits are done. But it's good on Brad for coming out and stopping the confusion and saying that there is no sense of partnership between Linkto and Ripple and so on. We've never essentially, the conversation that they had with them since late 2024, it's pretty much ended with any connection that was between Ripple or Linkto and so on. And that Linkto has been pretty much lying to everyone. It's a good thing that I never invested into it because I didn't believe in the idea of buying a company share that doesn't exist on the public stock exchange. And it's a good thing that everybody that follows me inside the CMF also listened to me and didn't buy any Linkto shares either. Now, moving on from that, but staying on the topic of Ripple. Swiss regulated Amino Bank backs Ripple RLUSD. So this is the news that's been going around today regarding a Swiss bank essentially backing RLUSD. So here is essentially what's going on that. Amino Bank, a Swiss regulated institution, has broken new ground by becoming the first bank globally to support Ripple's RLUSD, fledgling institutional custody and trading. This landmark decision reflects a major shift towards stablecoin acceptance within traditional finance, showcasing Switzerland's reputation for crypto-friendly regulations. Under this new offering, Amino Bank's institutional clients can now securely store RLUSD in regulated custody accounts and execute professional-grade trading directly through their banking interface. By eliminating resilience on third-party crypto exchanges and custodians, Amino Banks enhances operational transparency, compliance, and efficiency for investors. This move strengthens Ripple's ecosystem and boosts RLUSD's credibility in traditional finance circles. For Amino Bank, the decision underlines a proactive stance in crypto innovation and essentially on regulatory compliance. It may set a precedent encouraging other regulated banks to integrate stablecoins, especially those from established players like Ripple. Amino Bank, a Swiss regulated bank, has become the first bank to essentially support Ripple's RLUSD, Ripple's essentially dollar stablecoin, and facilitated essentially towards its institutional clients. Institutional clients that use Amino Bank, a Swiss regulated bank, are going to have full access to RLUSD. It's incredibly major news for Ripple, incredibly major news for RLUSD, and incredibly major news for XRP. Some people might say, well, what's the relevance to RLUSD to XRP? Well, RLUSD is on the XRP ledger, which essentially it draws attention to the XRP ledger. It draws attention to Ripple and draws attention to XRP. So even though it won't have direct value on XRP's price point, it will have indirect value because it draws attention to the chain and to XRP and to Ripple, the company. And on that note, we have reached the endings of tonight's live. So on tonight's live, on the CMF live, on episode 326 of the CMF live, we talked about essentially the Swiss regulated bank giving access to essentially RLUSD for its institutional players. We talked about Ripple's CEO breaking his silence on Link2Go. We talked about on tonight's live also regarding Franklin Templeton talking about how certain public companies are stuck on a loop cycle buying Bitcoin. We also went through news regarding Hammock Limited being another public company to add Bitcoin to their treasury. We also went through news on tonight's live regarding North Korean hackers being able to hack Apple devices, and everybody should be aware of how to safeguard themselves. We went through, actually, before we go, there's one more news before we go that I forgot to share, which is regarding essentially Bahrain. There's one more news that I forgot to share, which is regarding Bahrain. So let me just share this last news before we do go. Bahrain essentially has come out regarding their stablecoin essentially regulations. And Bahrain stablecoin regulations is a very pivotal leap for digital assets right now, because Bahrain has essentially approved in the past XRP through their central bank under their religious laws. So here is the latest on Bahrain's central bank. The world of digital finance is consistently evolving, and at its forefront, nations are racing to establish a robust framework that fosters innovation while ensuring stability in an essentially significant move that could reshape the landscape of digital assets. Bahrain has stepped forward, becoming a pioneer the realm essentially of Bahrain stablecoin regulations, and this bold initiative by the Central Bank of Bahrain marks a pivotal moment, signaling a very clear intent to embrace the future of finance with a cautious and foresight. The Central Bank essentially of Bahrain has officially unveiled its stablecoin, also the issuance and offerings of the SIO model. This isn't just another set essentially of rules, it's a comprehensive CBB regulatory framework designed to govern the entire life cycle of stablecoins within its jurisdiction. This framework covers everything essentially from the initial issuance to its ongoing offerings of these digital assets aiming to provide clarity, security, and integrity to a rapidly evolving market. For years, stablecoins have operated in a grey area in many parts of the world. While they offer the promise of essentially bringing traditional finance with the crypto world, their stability relies heavily on underlying assets that are backing them and the transparency of their operations. Bahrain's framework seeks to address these concerns head-on by ensuring asset backing, promoting transparency, protecting consumers, and fostering innovation. Bahrain's launch of its stablecoin regulatory framework is more than just a local policy change. It's a powerful statement to the global financial community. By taking essentially a leadership position in establishing clear rules for stablecoin issuance and offering the Central Bank of Bahrain is not only safeguarding its financial essentially systems, but also creating an attractive environment for digital asset innovation. This forward-thinking approach positions Bahrain as a beacon essentially for responsible crypto adoption, promising more secure and integrated future for digital finance. Bahrain essentially, a long time ago, Bahrain put XRP under their religious laws. So obviously, essentially, being in the Middle East, Bahrain, Qatar, Kuwait, Saudi Arabia, United Arab Emirates, they all apply under the same rule of essentially the Islamic laws of essentially when it comes to any investment essentially purchases. And under the Central Bank of Bahrain, about 2 years ago, they passed XRP, and technically the XRP ledger, as a halal change, essentially a halal chain for them. So XRP is technically under religious laws in Middle Eastern countries, got a green light. So, and Bahrain has just released their stablecoin regulations. And after Bahrain gave a green light to XRP, Ripple then after, straight away 2 weeks after, was green lighted in essentially the United Arab Emirates, was green lighted in Saudi Arabia, was green lighted in so on and so on and so on. So major things are happening right now in the central banking world, and major things are happening right now for Ripple. That was a little news right after the credits. Do you know when you watch a movie and the credits roll by and there's like a last scene left? That was what that news was. We also went through news on today's live regarding other matters of China's monetary policies. We also talked about on tonight's live regarding trade agreements of 100 nations. We talked about Michael Saylor's company possibly being in a lawsuit. And we also talked about essentially the Bank of England's governor on his new perspective on the market space. We talked about Senator Cynthia Lummis' perspective on the market space, on her new law, on her essentially new bill. And we talked about the Fed regarding rate cuts, Trump's movements, and other aspects. So those were all the news topics we essentially discussed on tonight's live. This was episode 326 of the CMF Live. The CMF stands for Crypto Miles Family. If you watch this for the first time ever, my name is Miles. You can tune to this live Monday to Friday, 10 p.m., where I talk about the most recent news that's happening around the world in terms of cryptocurrencies, CBDCs, AI, politics, and regulations. The disclaimer of this live, as always, is not financial advice, no political advice, and whatever I say is only for entertainment purposes. For everyone that liked this live, retweeted this live, and put a comment outside the live, thank you so much. And for everyone on YouTube who's watching right now, also who's liked the live, thank you so much, and put a comment, thank you so much again. And if you followed me and subscribed to me during this live, welcome to the CMF family. And I'll be seeing everybody tomorrow, same timing as usual. But before we do go, let's go to the comment section first. Always on point with your knowledge, Miles. Keep up the good work. Much love. Let's go, Christopher. Thank you so much for the kind words, brother. Night, Miles and CMF. Pablo, let's go. See you tomorrow, same time as usual. Good night, Miles and CMF. Funky brother, see you tomorrow, same time as usual as well. Another great show. Let's go, Funky brother. Shelly, great live as usual. Miles, appreciate your insight. Night and day, CMF. Let's go, Shelly. Thank you so much. And see you tomorrow, same time as usual as well, Shelly. Freddie, how you doing? Autistic says, good night, Miles. Thanks for a great live. As always, XRP to the moon and beyond. Let's go, Autistic. Thank you, Miles, for all the updates, Miles. Let's go, Susie. See you tomorrow, same time as usual as well. Take care, Miles and CMF. Ray, see you tomorrow, but same time as usual. Thank you so much. Have a lovely night. Oh, let's go, Lena. See you tomorrow, same time as usual as well. Thank you, Jonah. See you tomorrow, same time as usual as well. Thank you, Miles. Mike, see you tomorrow, same time as usual as well. Thank you, Miles, for another great show. See you tomorrow. Joe, see you tomorrow, same time as usual. I will see everybody tomorrow, same timing as usual, 10 p.m. London time. See everybody tomorrow, same time as usual. Everybody have a great day or a good night, depending on where you're around the world. Thank you so much to everybody who liked and retweeted this live and pushed this live further. Good night, Miles. Khalid, see you tomorrow, same time as usual. See everybody tomorrow, same time as usual, for episode 327 of the CMF Live. Have a good day or a good night, depending on where you're around the world. See you tomorrow, same time as usual.